Welcome back, everyone. Michael here with Offshore Citizen. I am reaching out to you from London today. Now, tell me, I had some people put in the comments on one of the videos that I should mention where I am each time when I'm traveling or wherever I am going, that people are interested. So let me know whether it's something that you think is important, you would like me to tell you, what you would not like me to tell you, you don't care. Appreciate the feedback. Anyway, today I'm going to discuss a little bit of a follow-up to, I did a little while ago, a video on how I, not that long ago, sold all my Bitcoin. And so I'm going to discuss what is my current operating, what we'll call Web3 chain thesis. And I'll explain to you a little bit about kind of how I've composed my thoughts around the subject. This is by no means definitively going to be what will happen. It is by no means what you or anyone else should do. There's lots of different people's goals for different purposes, but for me, it's kind of how I'm looking at things and where I see a fairly substantial opportunity. And so I figured, based on the comments of some people, it might be worth diving into. So we will discuss it today. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. Normally on this channel, aside from crypto type stuff, I discuss relocating abroad, international structuring, paying the lowest legal amount of tax, getting second citizenships, the best citizenship by investment programs, best residency programs, international banking. If you'd like help with any of those things, relocating abroad, figuring out the best structure for you, optimizing your tax, we can help you with both figuring out the best solution and implementing it. So you can feel free to reach out. You can either book a call with me at calendly.com/Michael-Rosmer. There's a link in the description below. Or you can send a message through our website, offshorecitizen.net, and you can reach out to us there. Okay, so here's how I'm kind of looking at things, not just from the standpoint of what is likely to happen in the world, but also I think where there's a possible investment opportunity. Now, let me note that this opportunity, of course, has a fairly high degree of uncertainty, and especially over like a 10-year time horizon, it has a fairly high degree of uncertainty. All right. So hence, my personal strategy is to make the best calls that I can at any given point in time, which sometimes means selling everything in a given asset class because I think the market's topped out, and reallocating somewhere else or holding cash or whatever, and reallocating. So, everything that I'm doing is based on what is the current landscape, and I'm highly adaptable and willing to adjust both my underlying thesis and the particular assets that I'm allocating to in order to kind of follow along that thesis, okay? So I understand that as some context going in. Now, this is very specific to what I see as kind of like what we'll call Web3 infrastructure, okay? So I think there are a few key pieces of infrastructure technology that are likely to become highly valuable over a 10 to 20 year period. And I think they have certain properties to them, which is not that difficult to figure out. So one of these is privacy related technology. I'm very interested in privacy tech. Some really good friends of mine have been doing a company that I'm trying to support them in that. There's others though out there. And so I do think that over time, there's a bunch of reasons why public technology, so we have decentralized public ledgers like Bitcoin, Ethereum, etc., do not serve the needs of a broad set of constituents, including really simple things like payments. Okay, so for example, if I go down to a gas station or go to buy lunch and I pay with a Web3 wallet on most networks right now, there are some exceptions, but most networks, that would dox me, and now all of a sudden people know what it is that my wallet balances are, all the transactions I've done, etc. This is a security risk in a lot of parts of the world. You can become vulnerable to kidnapping, you can be vulnerable to like muggings and assault and robbery and all kinds of things that you really don't want, as well as just pure financial privacy in general. So it's actually kind of a pet peeve of mine that a lot of the regulations set up in the world today are designed for the West, where things are fairly safe. Like if you look at, there's a lot of financial transparency in, say, Sweden. Well, Sweden's a fairly safe place, but try taking those same laws and go and apply them to, Colombia or Mexico or some parts of Africa. This is a terrible idea. So, just as I talk about from a structuring standpoint, from where to live, etc., there's no one size fits all. The same is true here, which, by the way, is another reason why I don't really love discussing if I'm going to be filming at the time that I'm in a place. It's not, I think, a super smart thing to do to release videos where you are at that time, just because, let's say I'm in, Mexico or something, and I do this. Well, you're trying kind of attracting attention to yourself. We've seen what happened to Kim Kardashian. I'm obviously not Kim Kardashian, so not anywhere near those types of risks. But I do think there's like some precautions that people should take in the world, and so that's something worth considering. Anyway, so I think that there will need to be privacy technology, and so there's going to be some big winners. Now, on the other side, there needs to be scalability technology. Scalability, basically just base level infrastructure that allows you to build out all kinds of other applications on top of it. Now, here we're going to get slightly technical. I'll try to give a really brief explanation for people about why this is going to be important, aside from all sorts of kind of like censorship resistant type reasons. So if you have a development background, and in fact, if you talk to a lot of developers, you will find that they say Web3 technology, which you can argue what the definition of that is, but let's argue decentralized technology, is much worse than Web 2 technology for most use cases. And from the standpoint of a developer, at the moment, the infrastructure and the tooling typically make building a lot of software more difficult in a Web 3 environment than a Web 2 environment. Not all, but a lot. Okay? So this begs the question, well, why would one want to shift to Web 3 decentralized technology versus more centralized Web 2 type technology? And to understand this, I think it's worth understanding that you have essentially three-part components of what can be done with computers. One is you can have communications, right? And so the internet basically decentralized communications. The way that the web is set up allows you to route traffic so that basically it doesn't get stopped at any given point. One part of the network can go down and it still gets through, etc. That was really useful innovation that has unlocked tremendous value. But what you don't have in that traditional web world is decentralized storage. Typically storage is centralized, and decentralized compute. Okay. Now, being able to have decentralized storage and decentralized compute are actually really valuable. And so that is kind of a basis of sort of Web 3. It's not necessarily tokenization, although tokenization is really interesting. It's not necessarily, crypto coins or decentralized money or exchange of value. Underlying it before that is the pure technology level that enables software. And so from a software development standpoint, you can think about this in terms of things like open infrastructure with essentially pay-as-a-service kind of business models around it. So you have to some extent this with Microsoft Azure, function as a service, similar with Amazon Web Services, Google Cloud, etc. There's a definite move towards kind of pay-per-use, but it's often facilitated through the use of APIs. And from the standpoint of a developer, if you don't have to have APIs, you don't have to fire up servers, you don't have to all this kind of stuff, you can just tap into a decentralized infrastructure and utilize that on some sort of a pay-as-you-go basis, and potentially the customers can be utilizing it on a pay-as-they-go basis, then that changes things quite dramatically. There's also advantages in terms of not having to rely on non-neutral infrastructure that can change. So let's use, for example, Farmville, big thing built on top of Facebook, then Facebook decides to change it. Business basically is taken out. If you're building on a neutral decentralized infrastructure, you don't have to be worried about that potentially. And so these are interesting reasons for taking advantage of that type of technology. There's other reasons socially, and I do think there are adoption effects. So, for example, if you try to build a centralized system to work with a whole bunch of different industry participants, let's say for supply chain tracking or something, it hasn't tended to be very well adopted. And arguably the reason is nobody really wants to use the other person's software, right? Whereas if you have some sort of open software that everyone can participate in equally, then there's potentially more buy-in, and that can be useful as well. So you also have coordination effects. It tends to be easier to coordinate when you're operating on kind of this unified ecosystem, etc. So bottom line is there's actually a lot of technological reasons why what we'll call Web3 technology makes a lot of sense. And the business models here tend to be quite different because the idea is that the infrastructure is open and permissionless, or semi-so, which means that anyone can utilize their hardware. And by the way, this kind of factors into a sharing economy thing. If you just think, Uber's been successful by taking vehicles and drivers who are sitting latent and activating those resources. Airbnb's been successful by taking people's homes, which are sitting latent, and activating them. Well, how many people's hard drives have a lot of excess storage space that is sitting latent and could be utilized, and they have unused bandwidth on their home broadband connection, let alone processing capacity, and they could earn yield in some form off of you basically renting that out, right? You basically build this network, and over time that becomes more and more compelling as the performance differential in a practical sense between what somebody is getting from a centralized service. So for example, for one of my companies, I'm an UpCloud subscriber. UpCloud's really great service, kind of competitor to Amazon Web Services, Microsoft Azure, DigitalOcean, Linode, guys like that. Very high performant, they work really, really hard to optimize to the speed of their hard drives, right? You're gonna get a much higher degree of performance that way than you will off of, renting out somebody's desktop computer at home. And certainly if you have a large degree of redundancy costs money, but over time, the amount of performance that you'll have in a typical desktop computer is going to go up, and the amount that you're going to need on a relative basis is not going to be so great. And so as a result, serving that from decentralized infrastructure makes actually quite a bit of sense. And then you can basically just optimize for resources throughout the system. So there's lots of reasons why decentralized infrastructure actually makes a ton of sense in many, many use cases, okay? Now, one of the main areas where you have that is you have a sort of chain system, right? Let's call it chains, just for want of another term. So blockchains, technically it can be directed acyclic graphs, so DAGs. There's potentially many other different data structures, so a blockchain is a particular data structure. But the bottom line is you have some sort of underlying infrastructure. And right now, these tend to be some blockchain variation. Now, when I'm thinking about investment opportunities, I'm thinking a lot about market cap, because market cap kind of dictates the upper bound of how far something can go. So let's use Ethereum as an example. Ethereum peaked out around a $600 billion market cap. This probably was around a reasonable expectation. I'd kind of projected in kind of early in the bull market that maybe around 500 billion was a reasonable number. And the basis for that was just kind of thinking, okay, well, if you think about Ethereum as a decentralized version of Amazon Web Services, what is Amazon Web Services worth? Maybe half a $1 trillion. So, that's kind of a similar analogy for where you could end up. Okay, so you can kind of make that argument. Whether it's valid or not is a whole other conversation, but you can reason by analogy in that way. Now, what does this mean? So right now, Ethereum is down to about 200 billion. So how big can it go? I mean, if it's really successful and it's dominant and people continue building on it over everything else, maybe it goes to $2 trillion or something over the next little while. So it tells you that you have basically a 10x upside. Now that's like arguably a pretty best case scenario upside over whatever period of time. Let's call it the end of the decade, right? Just to draw an arbitrary number, not because we're making any hard prediction, but just to give that as some sort of a bound. Now, by contrast, there's a bunch of other contenders who are attempting to win in that space. There are lots and lots of chains, okay? Probably over 50 chains. I can think for my one project, Defi Yield, I think we've integrated 25 chains so far. There's a whole bunch of others that we haven't integrated. So, that gives you some idea of how many are out there. Now, most have very little going on them. They won't have won't have much going on them, but that is what it is. Now, in this type of technology, because of network effects, because of developers, because of the accrual of liquidity on there, because of users, because of applications, you tend to get few huge winners. And so what I would expect in the space in general is that you're going to have 2 to 3 really major winners, maybe less, right? Probably 1 to 3 is the realistic number. You'll have 1 to 3 really big massive players who will do extremely well, and everyone else is going to go to near zero. There might be some kind of edge cases, but they won't be anywhere near the same level. And so a lot of these, if they're playing for, let's say being one of those edge cases, what's the upper bound of where they're going to end up, aside from, some random hype cycle? Maybe like a few $1 billion, right? So the problem is a lot of them are already priced in the hundreds of millions. So if my bet is, okay, well, maybe it could do on the upper bound 10x, then why don't I just buy Ethereum, because the risk is lower and I have a 10x upside, right? So the upside is the same, the risk is probably lower, and so as a result, I'm better off making that bet. So the only reason to make any other bet is that you have dramatically higher upside. Now, my thesis is Ethereum probably will not be the only player, if it will be any player at all. It's hard to say whether it will or it will not, but there's not a huge amount of upside in making the bet that it will be the big winner. So where the big upside is in making bets on who the replacement might be. And I think this is also a fairly easy thing to reason about, because there's not a lot of contenders at any given point in time. So for example, Hiko, Huobi Eco Chain, is not going to be it. Boba is not going to be it, et cetera, et cetera, et cetera. I can run through a lot of them that definitively will not be it, for sure. They're not going to get the traction. They're not going to go anywhere. Harmony is not going to be it. So the question that you can narrow that number down pretty quickly, and then you can ask, okay, well, what's the upside? And if the upside is, hey, there's going to be another Ethereum scale application, and I would say that by the end of the decade, it's highly likely we will have a minimum of 2 to 3 other Ethereum scale projects, okay? Meaning that they're going to be in the multiple hundreds of billions, probably $500 billion range, okay? And this is not a crazy expectation if we just kind of look at how markets have gone and, the rise of unicorns and decacorns and centicorns and all this kind of stuff over time. You would expect in that period of time to have a few of these different projects that would come out that win at that level. Seems not totally unrealistic. You could have one that exceeds $1 trillion, who knows? So the good news here is this puts almost all of the projects out there in the potential, 20 to 100x range. And that's maybe 1,000x range, depending on what it is you're looking at. Now, do I think necessarily that one of the projects which is out there today will be the infrastructure on which we build a lot of these things? It's entirely possible it's not. It's entirely possible that the ultimate infrastructure that we end up utilizing has not been invented yet or has not been deployed yet. Already we see, for example, 2 really interesting projects, Aptos and Sui. They've kind of come out of the Facebook or Meta DM project, are really interesting. Now there's a bunch of, I would say headwinds that they face, a bunch of challenges, and we'll see how they get adoption and things like this. But technology-wise, they're quite innovative, and there's really interesting things about why they could become something big in the future. We'll see. They don't have tokens that are publicly available right now, so you can't invest in them accordingly. But I just think, okay, well, what will be the things that are likely to win? And here it's pretty simple, because to figure out, my thesis is the only thing that can possibly win is something that does a really good job of essentially composable sharding or composable app chains. What does this mean? This means essentially, I've done a video previously on sharding, kind of explaining how sharding works and why sharding is so important, and fundamentally that you cannot scale beyond a certain level without sharding. In particular, if you want to maintain any degree of decentralization. So kind of talking about vertical versus horizontal scaling. And so the question is, projects, if you want to grow big enough and have a plurality of use cases, etc., you need to be in a situation where you're able to deploy multiple different, we'll call them chains, and have those chains interoperate with each other. So my dream, ideally, is that you have like a huge amount of composability between them, which essentially means that right now, let's say that, so already cross-chain communication is difficult. Bridges are the biggest security vulnerability right now in kind of the Web3 world, etc. So that in itself is tough. But composability across chains is much different. So when we're just transferring assets, if I say, okay, I have a token on this chain and I want to transfer it onto this chain, this is a hard problem in itself. But what I actually want is I don't want to have a token here and transfer it here. What I want to do is I have assets over here, and I want to use the functionality that has been built into this here and be able to combine these together into some superstructure. And I actually want to be able to do that across multiple at the same time. So the kind of functionality, the composability that I get from combining Uniswap flash loans with Aave with something else all together, I want to do that across chains, okay? And so at this point in time, nobody really has this functionality working, but there are a few people who are working on it and have the possibility that that could work out. The way that I liken it is I think about the human body, okay? So kind of biomimicry arguments. When we think about biomimicry, what we're thinking about is to say, well, in your body you have specialized systems. You have your nervous system, you have your circulatory system, you have your respiratory system, you have digestive system, you have your lymphatic system, et cetera, et cetera, et cetera. And these systems all work with each other, right? So I don't have to build, it's not like you have to build a nervous system for your digestive system. Your digestive system plugs into the nervous system and they interoperate really well together to achieve whatever else. That's kind of the structure that I think we want for computer networks. And so, that's kind of the basic idea. So in other words, in order to scale really big, you need to basically have sharded systems that have these different chains. And these chains are not that functional unless they can operate with each other. So you need a technology that allows you to interoperate between these different chains. And there's not very many solutions that are potentially going to go that way. And the value accrual is likely to be dramatic on very few of them. And so those ones who are very few who are going to have this massive value accrual probably have a 100x plus upside. So it actually pays you to take a diversified set of bets across, let's say, the top five contenders. Realistically, probably those 5 contenders will all do well in a medium term, much like how Yahoo did well, even though Google won, right? If you had bought Yahoo in the 90s and held it through there, heck, you could have held it to 2010 and you did quite well. And you had to happen to add Google along the way. Maybe I guess MSN was part of Microsoft, but anyway, you could kind of take a look and you would have done pretty well. So I think kind of the same thing is true here. You can say, all right, it's pretty obvious to see who is potentially going to have a chance. They're contenders in this game. Whether they're going to win or not, who knows? But they're contenders in this game, and the upside is really big. And I can buy them all, and then what I can do is, as the landscape changes, I can adjust my bets, all with this overall thesis in mind. And obviously the thesis could be wrong, right? It's possible that I'm off. For example, here's a counter argument. Kyle, who is the founder of Multicoin Capital, who's a really good investor, really, really interesting thought processes, very rigorous in his analysis, does great reasoning about reasoning, etc., is very much against the idea of app chains. So he thinks that app chains are not the way that you will go. I disagree with him, obviously. So my bet is that app chains are the way you will go, but a very smart guy is saying that that might be wrong, right? So no guarantee in either side. But I think if you say, okay, well, this is a likely path that could pay off, and the upside is really high, then you just start placing the bets. So what are some examples right now of projects which are moving in this direction? So the most obvious one is the Cosmos ecosystem. So Cosmos has done the best job for sure in building a multi-chain environment. I'll maybe do a video at some point in the future. Somebody was asking me to put together videos on specific projects and kind of explain them, etc. So anyway, the Cosmos ecosystem, which kind of semi-revolves around the Cosmos hub, is one for sure that is a massive contender. It has the strongest community that is working on kind of cross-chain composability or multi-chain composability, and so that's really interesting. The next that is interesting is Avalanche. Avalanche has this technology called subnets, and subnets have, again, lots of work to do, but is really interesting in terms of what is potentially available there. You would have to say that Polkadot would be one of them. That's kind of really their ethos, their focus, and so that would be an option. Then you would have potentially Near. Near is working on some interesting stuff. They've been hard at work with sharding. You could kind of throw stuff like Elrond in there. Elrond has some interesting tech revolving around something called adaptive state sharding, and the Elrond virtual machine is super high performant. However, in reality, Elrond has virtually no traction right now, so I would put it off to the side, at least for now. I think it's highly unlikely that it would be the winner. By the way, Near has also done the best job of thinking about the user wallet experience. So I think that's something worth noting. Polygon is kind of copying down that road, so they're another one that could maybe do it. Binance Chain is talking about kind of going down that direction. I was having some conversation with their team recently. They're very focused on institutional, so we'll see what happens. But they're also doing a big push to get like 30,000 developers onboarded into Binance Chain over the next little while in Latin America, and they have a lot of resources to do that. So we'll see. Yeah, I would say that realistically, like those are probably pretty much the ones that at the moment represent some sort of a chance in this path. Now, doesn't mean there can't be others. There 100% will be others who will make this attempt. However, at the moment, I would say they're kind of the reasonable contenders who could do something and may not do something. There's also, you could kind of throw in like over time the evolution of something like Cardano has that potential. I mean, there's lots who can eventually do it. I was talking to the founder of Phantom, Michael Kong. They have very long-term plans for that. Realistically, I don't think they're a likely contender in that space. Their development roadmap is just too slow to get there. In the meantime, they could do really well on other stuff, but in terms of the multi-chain, probably not. And so, yeah, this would be kind of some things to investigate and then take a look from there. But that's kind of my underlying thesis. My underlying thesis is you will have massive value accrual to a very few projects. You want to find that at this point in time where where you want to go is where you could have 100x upside, and there is relatively few bets that you could place that have that. These, fortunately, I think are relatively low risk bets, meaning that over the next 3 years, almost all of them are probably likely to accrue value, and you'll have a lot of more data going in 3 years from now than you will from then, so you can kind of adjust your bets. And maybe you'll catch it, maybe you won't, but assuming that this app chain thesis is accurate, then you'll have a pretty high potential. It could be wrong though, right? It could be wrong. And so that's something to continue monitoring, is to say, okay, well, maybe Kyle's right. Maybe there's a counter argument. And I mean, there is a counter argument. It's just, how viable is it? And so you can debate that out for yourself and figure out what your own thesis is. Anyway, let me know if you have any questions. Put them in the comments below. Curious to hear your thoughts for anyone who's actually deep dove into it and thought through the overall kind of changes in the ecosystem. But I think there's very interesting technology there. For me personally, like a lot of my financial goals are very much influence the direction of my thinking and building theses, right? Kind of where I want to be 10 and 15 years from now individually require that I think about things in a way that a lot of people don't need to think about them. So it's useless, right? A lot of people could just go with something much simpler. Yeah. But that's a personal choice. So not saying that anybody else should take the same thesis, not saying that anybody else should make the same sort of decisions, not saying anyone else should have the same sort of goals. But if you do, well, then you have to kind of reverse engineer, all right, based on my goals, how do I get there? And, what are the highest probability bets that I can make? And we'll see. So I hope that helps. We will see you guys on the next video.